Alright, hey, what's up guys? Scott here again with a new video, and for this one here, the topic is going to be why, in my opinion, you should not be trading any stocks that are involved in potential buyout deals. Right, so that includes Twitter with the whole possibility of Elon Musk buying out that company. That also involves Kohl's here, which you can see in this article. I'll talk about this as well in this video too. And mostly I'll be showing you guys through charts why trading these stocks is so extremely dangerous. Now, real quick though, in case any of you guys are interested in getting some free stock or quite literally some free money, I've got some very cool opportunities and promotions in the description of this video, so check them out. Right, for example, if you want $200 of free stock from Tastyworks or a bunch of free stocks from Webull, free money from SoFi, etc., then again, check out the links in the description of this video. And secondly here, in case any of you are brand new to the channel, again, my name is Scott, and you can also find me on SKILLSHARE as well, where you can take my very detailed classes on options trading or stock market investing. And you'll also find some links to a few of my introductory courses in the description of this video as well. So be sure to check them out, and when you sign up for SKILLSHARE using any of those links, you'll get a full 1-month free trial. Alright, so first off in this video, let's briefly talk about Kohl's here, given the fact that quite literally in the past couple of days, basically as of June 7th or around that time, there have been renewed talks of now the vitamin shop owner wanting to buy out Kohl's for a total valuation of $8 billion. And so if you scroll down a bit here, just want to go over the basic facts. And so in particular, it's Franchise Group, which is the parent company that also owns Vitamin Shop, that wants to buy out Kohl's. And this definitely also is not the first company in the past few weeks and months to enter negotiations for a possible buyout opportunity on Kohl's here. Right, as you can see, this company, Kohl's in particular, has recently been in the spotlight for fending off several activist bids. Although this time perhaps this deal could actually go through because the valuation for Kohl's and the share price, basically that Franchise Group wants to buy Kohl's at, is a lot higher than the current price of Kohl's right now. So basically this $8 billion valuation comes out to a share price of $60 per share. That's basically what Franchise Group is willing to pay on a per share basis to buy Kohl's. And so now with having said that, let's come over to thinkorswim and take a look at the Kohl's charts here. And first off, actually, it was on this day, which was back in March of this year, March 16th, where a different potential buyer was looking to buy out Kohl's. And so just on the news that Kohl's had entered negotiations for a possible buyout, the stock skyrocketed from a price of around $54 per share all the way to a high of around $64 per share. So that's a move of almost 20%, again, just on the news of a possible buyout opportunity for Kohl's. And then as you can see, as the days dragged on and basically the negotiations and the deal talks kind of fell apart, so did the stock price. Right, basically Kohl's unwound most of these gains here, and then also in recent times completely fell apart and fell all the way down to $36 per share. Now that being said, part of the sell-off has to do with just the general bear market we're in right now. Right, stocks across the board have been selling off pretty significantly in the past few weeks and months. But in my opinion, I would say the biggest reason for mostly this sell-off in here having occurred was because the deal talks or the buyout negotiations essentially completely fell apart. And then now fast forwarding to the past couple days here for Kohl's, now once again with renewed interest, with renewed possibilities of a buyout opportunity, Kohl's has been skyrocketing once again. So bottom line here, the first major reason why, in my opinion, you should just avoid completely trading these kinds of companies is because simply the news around the possibility of a buyout opportunity can cause the stock to wildly swing in price. I mean, quite literally in the past 2 months or so for Kohl's, we've seen price swings to 20% plus on the upside and down by 30 or 40% to the downside, followed by more 20% swings to the upside, etc. I mean, this stock is quite literally all over the place. And again, no deal has even been made at all at this point. It's all just rumors and speculation and news. But as you'll see here towards the end of this video, once a deal actually does get struck, that also can cause a huge, if not the biggest swing in the stock price as well. And now next up here, what about the possible Twitter buyout by Elon Musk? Right, obviously Elon is in the news pretty much all the time, but this possibility of him buying out Twitter entirely is definitely a very big deal. So now we'll come back up to the top here and go to TWTR, and then we'll go ahead and zoom in on this chart a little bit. And so once again, in a very similar fashion, you can see the exact kind of impact the news around a possible buyout deal from Elon has on the Twitter stock price. So I'll zoom in a bit more here. And so in particular, it was on this day here where simply the news broke out that Elon was interested in buying out Twitter. So once again, the mere possibility of that actually happening caused the stock price to gap huge overnight and skyrocket from a price of around $40 per share to a high of around $51 per share just in 24 hours. So that's about a 25% move, and I'm sure you can imagine that if for whatever reason you had a position on Twitter which was bearish, that position of course would have gotten completely blown out in just one day. And chances are if you had any stop losses or whatever on that trade, chances are a move of this magnitude would have completely blown past your stop loss, and your losses overall would have been much, much worse than you had expected. And then in a similar fashion with Kohl's, once that initial news broke out, the stock pretty much just traded sideways after that, as basically the negotiations were underway. And then now in recent times, it looks much more likely that this whole buyout deal might completely fall apart. Right, if we come back over to Yahoo Finance real quickly here and go to the second tab I have pulled up, as you can see, there's a study recently that found that 10% of Twitter active accounts post spam, and therefore bolstering Elon Musk's skepticism about the platform's claims. So basically, the whole reason why this potential buyout deal from Elon Musk might fall apart is because, according to Elon, Twitter has not been transparent at all about showing him statistics or information about which percentage of Twitter users are potentially bots and or posting spam. Right, so scrolling down a bit here, again, as the headline stated, a study estimates that upwards of 10% of Twitter active users are posting spam content, which is double the company's own claims. So this right here is basically why Elon is saying that Twitter is not being transparent at all about their user base, because clearly there is a wide discrepancy between what Twitter is saying and what the study is finding. So once again, as a result of all this drama and all this news, if we come back now to thinkorswim, that's why we're seeing the Twitter stock price collapse once again. And basically once all this drama broke out back here in early May, in just about 3 days here, Twitter fell by about 20%. So once more, just providing more proof here that simply the news cycle around a possible buyout deal can cause dramatic swings in the stock price. And of course, as a result of that, these kinds of swings are super, super difficult to trade. And of course, also they cannot be predicted in any way. So if you are caught in a bad swing in the wrong direction for one of your trades, the losses you might face could be enormous. And then finally in this video, let's take a look at a stock which had a buyout deal actually go through all the way. So I'm referring to Slack, which was bought out by Salesforce, I believe maybe last year or the year prior. So now in the charts here, we'll go to WORK and we'll zoom in here a little bit. And so take note of this massive jump in price for Slack over the course of literally one day. So this here was back in early December of the year 2020, it looks like. And this also was the day where the announcement was made that Slack is indeed going to be acquired by Salesforce. And though I can't recall the exact buyout price on a per share basis, but based on where the stock has been trading ever since then, it's somewhere around 42 to perhaps $44 per share. Right? It was roughly around that price where Salesforce agreed to buy Slack. And so obviously prior to this deal being made, if you had a position which was bearish or short on Slack for whatever reason, maybe because you saw this descending channel here or a series of lower and lower highs, seems pretty reasonable to play for a continuation of this downtrend. But quite literally, the fact that Salesforce wanted to buy this whole company for a stock price or a share price of over $40 per share, that's where the stock had to move to once that announcement had become public. And therefore, unfortunately, for any bearish positions you have on, all of those would have gotten completely torn apart. So naturally, that means if we come back to Kohl's real quick here, and we'll go ahead and zoom back in here. That means if the deal between Franchise Group and Kohl's actually does go through, and Franchise Group does purchase Kohl's for a price of $60 per share, that means Kohl's stock price will have to skyrocket all the way to around $60 per share. So once more, if you take the risk of placing a bearish trade on the stock here, basically betting that the deal will not happen, but it actually does, then be prepared for your position to get completely blown out. And of course, in my view, that's not a good form of trading. And then conversely, of course, if you wanted to place a bullish trade on the stock to bet that the deal does actually go through, but it doesn't, then just like with Twitter or also Kohl's back in this zone over here, when prior buyout deals fell apart, then once more be prepared for any bullish positions to get completely blown out as well. Right? Because chances are if negotiations between Franchise Group and Kohl's fall apart, then my guess is Kohl's stock price will plummet as a result. So bottom line here, guys, quite simply because of the extreme volatility you will see with a stock involved in a potential buyout deal, that is reason alone to simply avoid the stock altogether. And as I've shown you in this video, that crazy volatility can come from two different sources, either the extreme speculations and rumors and news cycle around the possibility of a buyout deal occurring, and then eventually the final outcome of those negotiations. Right, eventually that buyout deal will either completely fall apart or it will actually go through and the company will get acquired. And in either case, as I've also shown you in this video, the outcome of those negotiations will have a huge impact on the price of the stock as well. So ultimately here, guys, do yourself a favor and simply avoid trading stocks that are involved in potential buyout deals. There's plenty of other stocks that you can trade which are totally not involved in those kinds of crazy news cycles and speculation, and you'll save yourself a lot of pain and potentially a lot of losses as well. And so with that being said, that's going to do it for this video. I hope you enjoyed it, and please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want some free stock or some free money, then check out the cool opportunities and promotions in the description of this video. And also, of course, if you have an interest in taking some detailed classes on options trading or stock market investing, then check out my SKILLSHARE courses. Links also in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.